Trade Genius.
Hey guys, how's it going? Philip at Trade Genius. There's a lot of things brewing in the global macroeconomic scene. Just wanted to go over some things to kind of just remind us that, things are very tenuous and, things like Bitcoin really do make a lot of sense in this day and age. One of the first things is the global debt bubble. This thing is really, really huge. All debt levels around the world are at historical highs, and they're losing the battle. Here's an example of what that does when we have really cheap credit because debt and money printing is in effect. And you'll see this graph here is basically US corporate credit as a percentage of the GDP. So you have cheap money creates a debt bubble. You get things like buybacks, kind of is a misleading indication that things are good in the economy when really it's just a debt bubble ready to explode or implode. And as you can see with these areas that are highlighted in red, these are times when the markets topped out. We had recessions. And if you look right now, we're higher than the previous last three peaks. And if you were to draw a trend line across here, you'd see that we're probably running into that trend line here. And it's just not good. And showing us that we're running out of steam and, things could easily roll over from here. Another thing to look at is the pension crisis. And this pension crisis is huge. So this is basically unfunded liabilities, right? So if you have pensions, union pensions, government agency pensions, this is money owed to those who have been working, and as they retire, they're expecting to see this retirement money, but a lot of it's unfunded. They can't, right now they're underwater. Public pensions were $2 trillion underfunded 10 years ago, and now it's more like $6 trillion underfunded, according to the American Legislative Exchange Council. So these pension funds are going to be looking for things that have potential for a lot or high growth. And right now, Bitcoin is that leading asset that's really blowing everything else away as far as returns. So I think this also, is an indication of when you look at it from this standpoint, and these pension funds are looking for, because these pension funds put trillions of dollars to work, they're looking for big returns, and now they're under more pressure than ever to find that next asset, that next investment that has the most return potential. And Bitcoin really stands out in the crowd as such a vehicle. Auto loan delinquencies, the highest since 2012. 7 million loans at the end, 90 days late. 7 million loans are 90 days late at the end of last year. I mean, that's crazy. This is another thing where we start seeing a large amount of these start to default. This is going to put another strain on the financial system. Then we have the student loan crisis. Just a couple points here. National student debt is now over 1.5 trillion. I mean, that's just crazy. Get this, more than 3 million senior citizens in the US are still paying off their student loans. I mean, that's a broken system, right? I mean, that should never be the case. As many as 40% of borrowers could default on their student loans by 2023. So if you have an economic slowdown in GDP, you think these guys are going to have more of an ability to pay off their loans? No. So again, all of this is starting to add up to a really bad series of events that can really put a crimp on people's incomes, their savings, and again, we're talking about being able to hedge against things like inflation, because that's really what the central banks are going to turn to, money printing. Consumer debt is at an all-time high. Should banks be worried? Again, another piece of the pie as far as, problems in the macroeconomic landscape. Negative interest rates are coming and they're downright terrifying. So basically, we're starting to see, sovereign debt go negative. Banks in Denmark and Switzerland are now charging customers to hold deposits. Can you imagine having a savings account and they charge you for the privilege of holding your money? I mean, it's whatever we've learned about economics just flipped on its head. Denmark, mortgages with negative rates are available. So they're going to pay you each month. 3-year adjustable rate mortgage is at a point -28%. I mean, that's incredible. So what does that do? Scrolling down, some of the side effects of negative interest rates, increased deficits in pension funds. Okay, so pension funds, again, they're under pressure. They've got to find a way around this. And even an exacerbation of wealth and income inequality, right? That's a problem. this exasperates that further. If banks ever start passing negative rates onto retail depositors, the effect would be similar to inflation. Cash today would be worth more than cash tomorrow. That's from Bank of America, Merrill Lynch. So, I mean, again, you can see this stuff is starting to head toward what their only ammunition they have left is money printing. Okay, so you have to hedge against that. So, Bitcoin, my opinion, probably the greatest inflation hedge ever invented. Wall Street obviously is getting behind it. I think it's the way Bitcoin was designed, it fits into the regulatory landscape of the financial system. So it's not a security, right? It's a store of value first and foremost. But you can see where we are in the halving cycles. We've come out of the bottom. Now we've built up. We're holding. We'll probably consolidate. But guys, this is, these are the places where you see the greatest return. And I think this next halving cycle, you will see the greatest return. So, we talk about, every day you can be eking out 1 to 3% and adding that up, compounding that, and that really adds up. So if you haven't been accumulating Bitcoin, you can, like our money makers, this works on 15-minute, hourly, 4-hour, daily, weekly, giving you the opportunity, the spots to either getting some nice swing trades in or just accumulate at the peak, most optimal spots and build up your holding. So if you're interested in this, you can head over to Trade Like a Genius. We have school promo code. You can get our software, the Moneymaker, or you can join us in the room with some of these packages. I think you'll find the value here really, really good. So anyway, I just thought I'd give you a macro outlook on things and show you, where we are in the cycle, why Bitcoin is really going to be a great hedge, I think, in the coming economic stressors that are building right now and will rear their ugly head in one form or another, either another crash or, to prevent that crash like in '08, a lot of money printing and therefore inflation. So central banks have backed us all into a corner, including themselves. And you really need to start thinking about ways to hedge against or protect yourself against the coming shock waves. All right, guys, well, that's it for this video. Thanks for watching. Please hit like and subscribe. It really helps our channel. I'll see you on the next video. Take care. Bye-bye.
Trade Genius.